So I've heard a little bit about passive losses, but I don't know very much about what they are. Can you explain for anyone watching a little bit about them?
Sure. So the government doesn't allow a taxpayer to deduct what's called a passive loss unless they have passive income. So if you think about what creates passive versus active, is your job and your W-2 income is active, your rental property or your interest income may be passive income. So if you have a loss, if you generate a loss from your rental property, which most people will after they depreciate it, you may not be able to deduct the whole thing all in 1 year. So on the tax return, you're limited to passive losses first offset passive income, and anything that's over that may be limited. It just kind of depends also on your other income. So at 150,000 or higher, you're not able to deduct a passive loss at all. If you're active in your real estate, so that's another one of those rules. And by active, I think the number's 500 hours a year. They consider you to be actively, and most, that's not I might have that number wrong, so we should probably fact check me. But then you can deduct up to $25,000 of passive loss in a given year if your income's under 100,000. So it's kind of it's the passive loss rules. If you look those up, you'll see that there's limitations. And again, your accountant should know this. And just don't. If you do have a year where you have a lot of expenses, you may be disappointed come tax time because you're not able to use them that year. They do carry forward, so the next year you could potentially use them. And if you sell the property and have an accumulation of those, at that point you can deduct the whole thing once you dispose of the property.
So do you need multiple income streams to be able to write off passive losses then?
You need passive so if you have two rental properties, for example, you have a passive one that has a profit and one has a loss, you can offset those against each other. But if you have one passive activity, like just one rental with a loss, your loss may be limited. The other passive types of income, I said interest, but that's really like investment income. But it'd be if you would be investing in a partnership. And so the partnership has a loss, it's considered a passive loss. So again, passive loss rules are kind of complicated, but you should be with a professional who understands those.
Worth speaking with your tax preparation professional about that, certainly.
And that way, when you're putting your taxes together, you understand why maybe you spent all the money, but you don't get deducted all in 1 year. I hate when that happens.
But potentially in future years.
Yes, it's accumulated and carried over.
That's really interesting. I did not know about that, and I'm glad I do now.